Hello everybody, welcome to another update on the stock screener. Last time we bought Lukoil and let's look at the performance. It went from a value of 1813 to 1931. So that's an increase and I think it's time to sell it because the tensions in the Middle East have subsided. And on top of that, we have the coronavirus, which means that people are not going to use transports anymore. They're going to sit at home and wait everything out. So that's not very good for stocks and oil. So that's why we are going to sell Lukoil before it's too late. Okay, so we have how many shares? 15. Going to sell Lukoil. Okay, let's do that. So now Lukoil has been closed and we have made a profit on that. Now our overall return is almost 90% since inception. We started at 1000 and we're now at 1876. So now our new stock pick is going to be Sofina, a Brussels stock. Well, this is actually a holding, and this holding company invests 80% of its money in private equities of fast-growing businesses, and they are invested in digital transformation like online sales, which is exactly the future, and more people will go into digital transformation. They're also in the retail sector and in healthcare. I will show you in the presentation. Very important here is that they have relations with Silicon Valley, so they know all the right people there. And also very important is these are private equities, so nobody can buy them publicly on stock exchange. So only Sofina can get their hands on these things. And they invest in European companies, but they have a global exposure. And Europe is also very cheap at this moment. It's, I think, a PE ratio of in the 14, while the US is in 18. So they are very undervalued. And this one is extremely undervalued. They have a PE ratio of 7. And you can see here that their net profits are growing. So I think this growth will continue. And they are undervalued already. Also, they are in the private equity. And as you know, private equity stocks are always on a discount here since a decade. They are always cheaper than public equity. When you look at their enterprise value to EBITDA, and that means that they grow much faster. They grow much faster than public equities. Now let's look at their presentation very quickly. So these are the 4 sectors that they invest in. This one, of course, the most important. Then also retail, education, healthcare. The equity has been rising, and that's not going to stop. They have 3 offices globally. And you can see here that they invest in growth businesses. Apparently they started Started with Colruyt in 1975, which is a retailer of food in Belgium. I also shop here, so it's a very good company. And then they went into e-commerce in 2012. So that's their business. So the first tranche of investments is in long-term investments here. And these are the companies that they invest in: biotechnology, dental, uh, retailer, food industry. They also have some investments in New York, and also logistics, apparently, and healthcare. The second division is in growth capital funds. You can see all the companies here. And these are global companies. Some fast-growing businesses here. Indian beer, SaaS business, very important business here. Cloud, software as a service is coming up here. Very fast growing. Some chip manufacturers, Indian things, Indian investments, Indian beverages. So you have a lot of exposure to India and Africa. Another Indian thing here. You like to invest in India, it seems. Another India. Another India. I don't know why they have so many Indian companies here, but I think India is a fast-growing country, it seems. So in a nutshell, that's the business that they are investing in. A lot of returns here, 14%, 10% per year. Also very important is the board of directors. You can see here the Guy Verhofstadt is one of the board members of the board of directors, and he's the former Belgian prime minister. So we have very competent people chairing this board here, and is a family business. So that's very important to have a good management, and then the business will do well. So that's what we are going to do. We are going to buy Sofina. Again here, PE ratio 7, dividend of 1%, price to book is only at 1, so that's a good valuation, and the stock is only going up. So that's the price here. Let's buy. How much can we buy of this? 10 is a bit too much. 10 stocks. So let's buy 6 stocks maybe. Well, let's take 5 or 6. Let's take, yeah, let's take 5. That's more than enough. Then we have 1,000 here, and in dollars it will be a little bit more. Just to have some cash on hand. Sofina. Sofina, and then we add 5 shares at the price of 211. And as you can see here, we have 5 shares of Sofina, and the rest is cash. And I'll see you in the next video.